Pankaj is joining us now. Pankaj, good afternoon. Pankaj, you've seen, earlier taper tantrums as well and how market has coped with it. Maybe the new generation of traders, investors, which have just come in the last 3 years, haven't. Why don't you refresh our memories a bit? Earlier, when how emerging market tend to factor it in and move on, we have seen rate hikes in US and we have come to fresh life highs. So if you could tell us that emerging market, eventually the growth oriented ones like ours, demographic, dividend, etc., do manage to cope all of that, don't they?
Well, good afternoon, Ajay. I think it's a very interesting question, Ajay. I think, but the context of 2021 taper is probably very different from the 2013 taper, because in 2013, when the US Fed announced taper, it came all of as a surprise for markets globally, and the markets were not prepared for it. This time around, the Fed has been spending some time preparing markets well in advance, fairly guiding that they probably are thinking of starting off a taper from somewhere towards the end of this year and probably run it through the course of next year. So I think to that extent, markets are anticipating that and are well prepared for that. Also, I think the India of 2021 is very different from 2013 because when the taper announcement happened in 2013, mind you, India was at a situation where we had double-digit inflation for 4 years preceding that, and which is why when the liquidity moved away from emerging markets back to developed markets because of the rising dollar, it hit India very badly. But this time around, I think the last 3 or 4 years, inflation in India has been well under check, and we have inflation framework which has been given to the RBI and the monetary policy. So I think India is in a far better position this time around to deal with taper. Also, forex reserve, as a our imports cover are significantly superior this time around than what it was last time around. So there could be some short-term volatility, but I don't see a very significant impact of that on emerging markets or on India either.
For calming the nerves and putting that in perspective, Pankaj, let's talk about your concentrated portfolio then. I really like the mix of, though you have financials, at the same time you have good dollops of consumers and pharma. Let's talk about how the earnings of your portfolio went by. I can see from your fact sheet that you are expecting around 25% kind of growth in earnings for your concentrated portfolio for 22 and around 20% in 23. But how much of that is on track for the quarter gone by? Is the run rate already happening, and what is the kind of commentary you are hearing from the managements of your portfolio? Is it encouraging?
Yeah, absolutely, Ajay. In fact, I think the change this time around is over the last 4 or 6 quarters as economy started unlocking in July last year, we've seen very robust or encouraging commentary from corporate India largely because, the large part of deleveraging process which was ongoing in the economy over the last 3 or 4 years has largely played out. And now companies, one, have a very strong balance sheets, especially the large ones. And more importantly, because of the strong underlying demand recovery that we have witnessed in the economy and that they're forcing, they're looking forward to go back and make fresh investments in their business, which they haven't made for a very long period of time. So after a very long period of time, I must say that I see very high level of business confidence amongst corporate CEOs. And they sound very optimistic on the outlook for their business over the next, let's say, 2 to 3 years. And I think we've seen something similar or heard something similar from our portfolio companies as well.
Okay. Pankaj, there was a report put out by ICICI Securities, Mr. Kharki, if I'm not wrong, which tend to be making a point that a new Capex cycle is in a big way starting off because free cash flows are very healthy, healthiest they've been for Indian corporate almost in 10 years. You've seen cycles before. Usually when this kind of a cycle takes off, how prolonged is it? Does it go 2-3 year plus far out? Just to understand the longevity of this.
See, the context in India is one of the largest Capex cycle that India has witnessed in the last 20 years was one between 2003 and 2008, which lasted for almost about 5 or 6 years. But then because of global financial crisis and significantly over investments, our economy did hit air pockets, and we took a fair while of time to absorb all that capacity. But I must underline the fact that structurally, Indian economy today is very different than what it was 10 or 12 years back, and we have done significant amount of structural reforms in the last 7-8 years to enhance the absorptive capacity of the economy. So, if we really manage our economy well and the macro drivers well, then I think once this Capex cycle gets going this year, I think this can be a very long cycle. To my view, this cycle can really surprise all of us on the upside and probably can sustain for 10 years because as an economy, India needs significant investments in all pockets of economy. So probably, I think we could be in for a very prolonged cycle.
I see you follow a very concentrated style of investing, but tell us incrementally what are you researching or reading these days? Not necessarily whether you're making changes in your portfolio on the basis of that, but for academic purposes, what area is your area of research right now in the market?
So actually, Ajay, we've been spending a lot of time, on the potential investment cycle that's likely to unleash because we firmly believe that there's one on the horizon, and we're already seeing green shoots of that, across different sectors of the economy. Just to give you an anecdotal example, all the metal companies are going to make this year the highest cash flows that they've ever made in their life. And this holds true not only for metal companies in India, but most of the global metal companies as well, which effectively means over the next, next 5-7 years, they're going to make significant investments into new capacity creation. Likewise, other thing that excites us is some of these disruptive technologies that are emerging and which can have a significant bearing or influence on the economy and on the consumer behavior, be that across electric vehicles or be that across hydrogen as a fuel as we transition the global economy towards clean energy or the renewables. So some of these new emerging technologies which will become a significant part of our ecosystem, I think sounds very exciting, from the next 5 to 10 years point of view.
Pankaj, when you are interacting with your affluent clients or high net worth clients across the country, beyond the metros actually, I would like to get your thoughts. Are you witnessing a shift away from traditional choice of investments like premium luxury real estate or parcels of land? Do you see, because there is a view that only Gen X or the millennials are rushing to the market, but there's a faint, not so popular view that people have made their wealth traditionally from their businesses and selling off their businesses, and till now were loving real estate alone as a area of parking big money. They are also making a big shift. What are your interactions with your big clients suggest right now?
Absolutely, Ajay. I think the fact remains that the exposure to equities or the contribution of equities in India's overall household savings still continues to remain very low. But I think the good thing or the silver lining is that investors across the board and even in some of the smaller towns and cities have started understanding equities in a far more matured fashion, where they understand that equity is a cyclical asset class which goes through its cycle. So you need a disciplined investing approach and probably have a slightly more long-term approach and stay invested into equities. So I think that kind of a mindset is getting created, and where people are now looking at equity as a core asset class rather than just an asset class where they want to park their money, make some money and move away, or a tactical asset class. I think from there people are realizing that equity is a core asset class which is to be held on to their portfolio for a long period of time, and they do want to increase their exposure to equities, because even despite making allocations, the overall allocation to equities still continues to remain low in relation to where it logically should be.
Just one question, Pankaj, before I let you go, on exhibition companies. You have one of the exhibition companies in your portfolio. We won't talk about a particular stock, but out of all the unlock plays which the market turn by turn have taken a fancy for, be it hotels, resorts, all of that, luggage companies, etc., I'm surprised that the exhibition companies seem to have been ignored. What's happening out there? I mean, both the large organized players, I mean, we just ran a story of PVR, but somehow, why in your mind could market be ignoring they are absolutely flatlined for the full year.
I think that's primarily because that some exhibitions or theaters have not been allowed to open in some of the key cities, including Mumbai, which is a significant contributor to the overall box office collections. And secondly, there's an impending fear of third wave, and which is why some of the state governments, including Maharashtra, are holding back on that. So I think once exhibition theaters open up in some of the key markets, including Mumbai and Maharashtra, over the next few weeks, and probably this fear of third wave recedes, my expectation is that we'll see a we'll see a revenge spending from consumers. Where consumers will go back to the theaters to experience, having watching movies in a theater, which they haven't done for almost 18 months now. And at the same time, there are a lot of movies which are ready for release and which has been held back. So I think my expectation is that we should see a very sharp revival in the sector, because it's one of the key consumer discretionary play from an Indian consumer baskets perspective over the next 1 year.
Thanks so much for joining us. Always enjoy chatting with you about markets.
Thank you, Ajay. Pleasure talking to you.
Time for a short break. On the other side, more news and analysis. Don't go anywhere.